Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. One of the things that I like to do is engage with you guys by looking at the comments that you write on the videos and try to answer as many questions as possible, as honestly as I can. Okay. Sometimes obviously I will miss one or two questions because, like I've always said to you guys, I will do my best to answer every single question, but sometimes it's almost impossible because, as you know, I have a full-time job that's really demanding, as well as I have a small children, so I have to make time for family and so on. So when I get time, I would like to actually talk about stocks. I can talk about it all day, but obviously sometimes looking at the comments, especially when there's so many of them these days, it's almost impossible, but I am keeping up with it so far. There's one or two that I've missed so far, so apologies if I missed it. Write it again on another video, inshallah, and then I will basically do it. I will answer it, inshallah, as much as I can. So I'm not ignoring anybody. It's just sometimes I say, okay, I'll do that, and then I kind of forget about it. Lately, I've got a better idea. So whenever you guys ask me a question that needs an answer that I need to talk about later on, I make note of it. I write it down on my diary, and then I'll talk about it in the video. So I'll do my best anyway. So one of the brothers actually asked me recently if I can look at a company that we're going to talk about today. But before we do that, I'm actually going to try to answer some of your questions in the comment section in the last couple of days. So the first one I want to talk about is on the top. It just came through, and basically someone commented on the last video and said Schwab is haram. Now, I'm not sure if you watched the video, but if you watched the video, you will know that I was talking about, I said is haram, obviously, the ETF itself. But the stocks that we talked about are Sharia compliant, and please watch that video so that came about 20 minutes ago. So the next one is someone was asking, Duck Infinite actually said, is there any Sharia compliant ETFs in the interactive brokers? Yes, absolutely. So go in there. Majority, including the US based ones, are all in there. So if you're interested, have a look at that. Again, remember, you're going to have to take your own risk. I'm not giving you financial advice, but you just need to go in there and have a look at it and invest it in your own money and so on. Now, another brother asked me if I can look into some of the oil companies, energy companies, and gas stocks and so on. So I'll put that video together, inshallah, as soon as I get the time. Another person have asked me a question, and I think this person have asked this question before. They said, I've asked this before, but I don't know if you've noticed. I was wondering what your opinion is on the ethical issues of stocks like J&J, whose baby products and so on basically have caused a lot of issues recently. Now, the pharmaceutical companies have tendency to actually cross the line sometimes, okay? What I normally do is I will look at the company. So, for example, I own Amgen, I own Merck, I own J&J, and so on. What I normally like to do is assess their situation, okay, by looking at, are these companies doing more for people than actually more harm or more benefits? Are they actually helping humanities, or are they just causing all sorts of issues? Company like J&J, yes, the one of the products they have had, and that's I think still ongoing thing, okay. The baby products have apparently caused cancer, right? Now, I'm looking at J&J and saying, okay, how many products do they have, and are these products actually helping basically mankind, or are they actually causing all sorts of issues? The answer to me is they're actually helping more people than actually they cause more. They're not causing basically more harm than actually they're causing. Is actually helping humanities. Now, you're gonna have to be careful, because in the end of the day, these companies want to make obviously profit. But if these companies have, for example, right, so we're saying some of the products they have is causing basically cancer, right? Do they also have other drugs that are helping other people? And that's how I look at it. And that's basically one of the reasons I can justify, and just into myself anyway, okay, maybe I'm not doing a good job of just trying to justify it to you right now why I'm investing in these companies, but basically what I'm trying to say to you is, I look at the overall company and say, okay, are they causing more harm than good? And if they are causing more harm than good, then I'm out. Okay, if they're actually helping people and they actually good for humanity, is actually they created more products that's going to help us in the long run and basically helping us in generally, then I'm all right with that. Okay, although it's just a questionable, and again from the ethical side of it, it might not be a great idea to invest in these companies, but you have to basically ask that question. You have to, everybody is different. Okay, if they're causing more problems for people than actually good, then obviously you're gonna have to find another company that can do that. But for me right now, the only reason I'm actually investing in these companies is by looking at companies like Merck, for example, who has a drug called Keytruda, who's actually for cancer patients. Okay, and we know how important that is. So that's basically how I look at it. Maybe that's not for you, and if that's not for you, genuinely, there's a million other companies out there, like, you know, companies out there that are doing absolutely amazing things that you can invest in. So you're gonna have to, but that's how I basically justify that one. And I want to talk about that one because it's really important that you've asked that question, and obviously from ethical perspective, it is very important for us to all. So yeah, so that is that one there. Another thing I want to touch on is recently Tesla had a split. Okay, that makes no difference. Okay, to this basically stocks fundamentals, it makes absolutely no difference. Okay, they basically, imagine buying a whole piece of, for example, and dividing it into 7 instead of 5 or 6. Does that make sense? Okay, it's still the same one piece, but you've decided to slice it 10 different slices instead of 4. So nothing has changed, it's the same thing. And valuations for Tesla right now, it's basically looks like it's fairly valued at the moment, but again, because it's a higher multiple stock, you're going to have to take that into consideration. It's very basically leveraged stock, it's quite volatile at the moment, so you're going to have to take all that into consideration if you are buying that stock. Yeah, so that is that one. And in terms of looking for stocks, basically for some of the fundamentals of companies, some of the things that we talk about every week when we're doing stock analysis, these are the things that are important to me, and I'm going to talk about that in a second. The company we're looking at today, and one of the subscribers requested, is Teradyne. And this is a semiconductor company, so they do a lot of testing equipment for semiconductors, testing for basically hard disk drives, circuit boards, and electronics systems, wireless testing for devices. So they are in that kind of industry, and a lot of their money comes from basically the semiconductor side of testing side of it. So that's why it's in that sector, if you like. Okay, some of the things that I'm looking for when we're analyzing stocks is obviously look at their current PEs, because to see how expensive this is. Okay, we're looking if they have a dividends. I'm looking for the yield to see how big or small it is. Normally I don't like companies that are like about 4%, 5%. I stay away from these companies because normally they can't afford it, and so on. Companies that have a very low payout ratio, which this company seems to be, we're looking at things like the growth of that dividend. Can they actually pay that dividend? So I'm looking at the free cash flow there. I'm looking at the profit margins. I'm looking at the history of the company. I'm looking at basically what the analysts are saying right now, and a couple of more other things. So let's look at this, use this one as an example. There are more to it, obviously. There's so many different metrics out there, but to kind of give you a quick summary, this is some of the things that we look for. And if you are new to the channel, one of the things that I always insist is basically having that free cash flow. Especially whether you pay dividends or not, companies with free cash flow can pay off debt if they need to. Okay, they can buy other companies if they need to. They can buy back their own shares. They can reinvest in the business. They can do a lot with that money. So that is one of the things that I'm looking for. So this company is currently trading $83 per share. They have EPS of $4.75. They have an EPS cents, and then EPS in next year, basically they're expecting almost a 5. So there's a bit of growth in there. Market cap only $13 billion. It has a wide economic mode, and it has a very high beta. So we're normally looking for anything below 1, but this one is actually quite high. Okay, P is quite low, 17. Okay, average for the last 5 years is about 21, and the free cash flow is about 17. Right now the sector is about 25. Okay, PE. So in terms of the sector, it actually looks like it's cheap. Dividends almost non-existent, 0.5%, but is actually quite low in terms of payout ratio. we're looking about 8%. 5-year growth rate 11%, which is nice, so they're growing it fast. Dividend growth streak of 7 years, so they have increased that dividend over 7 years. And the safety is 74. Normally anything above 61 is quite good, so 74%, that is the dividend safety. Free cash flow, we're looking about 828 million, so it's not even a billion, but that should cover this very, very small dividend. But a company in the tech sector, I would expect a little bit more free cash flow, but I'm not sure what they're doing with it. Maybe their equipment that they use for the testing costs a lot of money, so it'll be interesting to find out a bit more. So once you actually got the overview, you then have to go into their balance sheets, look at the kind of products they sell, their competitors. There's so many other things you need to look into. Okay, so in terms of profit margin, we're looking about 24%, 24.5%, operating margin of 28%, return on equity 34%, which is absolutely brilliant. These three metrics are absolutely brilliant. Return on equity, total return, over the last 10 years, you're looking about almost 19%. Okay, current ratio of 2.8, which is basically very good. What this tells us is this company has enough basically money in the bank to pay off their current liabilities for the next 12 months. Okay, next 5 years they're expecting 5.5% growth. Okay, in terms of earnings, Simply Wall Street is actually saying 56% undervalued. Their price target is $191 per share. Morningstar actually almost agrees with Simply Wall Street at the moment. They're saying 50% discounted, $167 per share. That's their target. Tip rank is $114, 37% upside. And then according to Yahoo Finance is also identical. These two agree normally because they use the same sort of analyst and they're looking at only the next 12 months. Okay, so by the end of the year they're expecting the price to be $114, and these guys, this is the intrinsic value of the business, so what the shares are worth based on their projections, based on their discounted cash flow model. Okay, in terms of the tip ranks is actually moderate by a couple of other things. So in terms of total revenue, okay, so this is basically how much money they received selling their own products, from 2.1 billion to 2.2 to 3.1 to 3.7 to right now 3.4. So there's a bit of a decline in the basically trailing 12 months. Okay, but that's maybe something that you need to look at their recent financials and see if the company has made the projection for some sort of a decline to come in there, because a lot of these companies are now, especially in the semiconductor companies, that came out and said, do you know what, next 12 months it doesn't look that great, and they actually forecasted lower revenue and so on. So it will be interesting to see if they're in that boat as well. Cost of that revenue, okay, so you can see from 80 million to right now 1.3 billion, so that's increasing. Again, obviously you expect that, because as this goes up, this normally goes up with it, because they're using a lot of money to actually create that revenue. But their gross profit from 1.2 to now $2 billion, that looks really decent. Okay, free cash flow here is really important. Normally what you want to invest is a company that's increasing that free cash flow every single year. So 362 million to right now 828 million. So it's actually increasing and heading in the right directions. And what is declining, which is good to see, is the shares outstanding, right? So although they pay very, very small dividend, they have decreased their shares outstanding from 230 million to right now 177 million. Okay, and that is very good to see, because a company that's paying very small dividend, then you want to be basically in a position where is actually your one share is worth more as time goes by. Okay, and that's really important. So if you're a long-term investor, that's what you should be doing. The final thing I want to share with you is the Sharia compliance side of it. So Teradyne is actually right now 99.93% basically compliant according to Zoya, and interest-bearing debt is only 1%. Interest-bearing securities is 5.7%, and normally these two we're looking about 30% or more. More than 30%, so that is basically the cutoff, if you like. So again, it seems a great company, but I don't know if I would ever invest, I'll be honest with you, because I do have a lot of semiconductor companies out there. I basically have in my portfolio, and at the same time there are better companies Okay, I don't know if it's not the same sector, but in the same kind of testing companies, but in terms of the general sector of the semiconductor side of it, there's so many companies that are really cheap right now that I believe are better than this company, right? Because I don't like the fact that the free cash flow is not in the billions. Number one, the PE seems really low, and the fact that they've got massive upside in terms of they seem really undervalued at the moment, and their margins are really good. That is a very good sign, right? But yeah, I just don't like that low free cash flow. But overall, it seems really good company. It's been around for a very long time as well, and a lot of the only thing will be cyclical, because the semiconductor testing companies, basically that whole sector is very cyclical right now, because it depends on whether there's a demand for those devices or not. If there's no demand for this, then obviously this company is not gonna be testing anymore, because remember, it all depends on how much we need those semiconductors, right? Those chips. And if there's a decline in terms of the demand for the chips, then obviously these companies will not do as much. And the fact that 71% of their sales on 2021 came from that's a little bit worrying, okay? But if they can diversify more, then, and they have plans to do that, then that would be really good. But they do serve a lot of the foundry chips makers and so on. So we'll see anyway. But overall, that's my opinion. That's what I think. That's the fact. And if you are then interested in this company, what I would advise you to do is go to their website and learn everything about the company. Look at the basically 10K from the last 5-4 years, and see what they've said in the recent quarter, say basically in terms of the projection for the next couple of years, and then you can make up your decision based on that. Okay, I'm not a financial advisor. I'm just telling you what my opinion on what I think about the company, and based on the research that I've done. All this information comes from all different websites, and I have to kind of put it together for you guys. So and basically share my opinion. So I'm not basically telling you something what I think about, these numbers come from actual websites. It's not something I made up. So anyway, I hope you enjoyed the video. If you have, please like, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.